Hello everybody, Coulter Brown here from the Northern Ag Network. Thanks for joining us for our livestock market report. This report is sponsored by our friends at Ag Risk Advisors. So starting out here, just really like to thank them for sponsoring this and helping us get a little more information out there about what these markets are doing. Of course, if you have any questions about price risk or weather risk, make sure you reach out to Ag Risk Advisors and certainly check out their new website, lrpadvisors.com. You know, after a year like 2020, it's not saying much to say that cattle producers are hoping for better days and better prices in 2021. Although markets did start to improve towards the end of last year, certainly off the price lows we saw at after the pandemic got over and well into the summer, but prices improved through the end of last year and have continued that trend for the most part in 2021 so far. Certainly the large variable right now has been the sharply higher grain prices, and that is impacting livestock markets. As we look to the futures here, corn prices have jumped 60 cents in the last month, quite a bit more from before then. So that's driving up the cost of gain of cattle and kind of changing perspectives in the cattle feeding segment. Now, cost of gain had been fairly steady with corn staying from $3 to $4 the last several years. Most of that cost of gain in the 75 to 85 cent range, but as it's going to approach $1 now, it's going to cause cattle feeders to change how they're thinking. They're either going to want to put pounds on those cattle cheaper by turning to more grazing, or they might just feed cattle to lighter weights. We might see more cattle being harvested at 1,300 pounds rather than 1,500. But either way, if you're watching these futures, they seem to indicate that prices are going to increase. We saw the nearby February live cattle finish January at 115, but if you look at the December contract, it's up there at 122. Similar story for the feeders. We've got the nearby in the high 130s, but getting into the fall, we've got those contracts more than a dime higher in the low 150s. The cash cattle market did trend lower for most of January, but at the end of the month, we did see prices increase as cattle feeders held firm. We saw the live cattle $3 better, primarily at 113, and dress deals about 5 higher, some even 7 higher, ranging 178 to 180. These are the highest cash prices we've seen since late March, so that's definitely a positive factor. Turning to look at the feeder market, the biggest test of the year so far, definitely the Northern Livestock Video Diamond Ring sale that happened in Billings. 70,000 head sold there. Pretty optimistic on the prices. The calves there sold for delivery from January into February, some into March there. 5 to 5.5 weight steers selling largely in the 180s. Upper 5 weights 166 to 175. 6 to 6.5 weight steers 155 to 163, and the bigger 6 weights 146 to 154. 7 weight steers mostly in the 140s, some getting into the 150s, and your bigger 8 and 9 weight steers 131 to 140, just depending on what they weighed. Now after that sale was in early January. After that, prices definitely stayed steady. A lot of sales getting stronger than that across the region, so some optimism about these feeder markets. The bred cow market maintained its strength too. I don't think I'd quite say it was stronger in January, but certainly steady with what we saw in December there. A couple of big sales at Torrington Livestock in January. The most recent had the bred heifers selling from 1410 to 1510. Young 3 to 4 year old cows from 1300 to 1435. A little bit of pressure on those prices, and short-term cows largely from 725 to 985. And friends, I'd be remiss if I didn't mention this sheep market. Beginning the month at the public auction yards in Billings, I think the strongest feeder lamb market we've ever quoted. We saw a lot of those 60 and 70 pound lambs topping the $3 mark, getting well over the $3 mark as you can see. The 80 pound lambs 260 to 275, and 90 pounders 230 to 245. Since that sale, we have seen prices come down a little bit off of those peaks, but still staying really strong, and those slaughter ewes have stayed right there from 90 cents up to $1.05. So a very welcome rally there for our sheep producers. And lastly here, I want to finish this report looking at the USDA cattle inventory report that came out at the end of January. Now that was largely expected to call the cow herd smaller because we've entered the contraction phase in the industry after cow numbers peaked in 2019. But we're not seeing very fast contraction. We're just about 0.5% smaller than last year in the beef cow numbers. So we're starting to see the cow herd shrink, and it's likely to do so well into the middle of the decade. Now what's that mean for cattle producers? Less cows means a smaller calf crop, and smaller calf crops eventually mean less beef production. If beef demand stays steady, which I should think it will, that's going to equate to higher prices. Why is beef demand going to stay steady? Well, just look at the last year here. During the pandemic, we saw record high beef prices. Restaurants pretty much shut down, but demand still holding firm. And we haven't really even tapped the new export deals we put together, so definitely some optimism for the demand side of the equation. Now, one other thing I think we have to talk about as we're looking at these cow numbers is leverage, specifically with the packing segment. As any rancher knows, packers have held most of the leverage here for the last 4 years or so, but as we're looking forward here, we're likely to see packing capacity increase. More small and mid-sized plants are coming online really across the country, and so that's a small but meaningful increase in packing capacity as we're going to see more capacity, smaller herd. Hopefully that means packers will be paying more dollars for these cattle, and if you're listening to Cattle Facts at all, they say prices are going to be higher into the middle part of the decade, so a lot of things to like about this direction of the cattle industry, but when are we going to get those higher prices? It's hard to say. So whether you're concerned about the weather risk or the price risk, make sure to reach out to our friends at Ag Risk Advisors. Again, check out their new website, lrpadvisors.com. Thanks so much for joining us for a look at our livestock markets. If you need more ag news, markets, or weather information, check out our website at northernag.net. I'm Coulter Brown, and we'll see you down the trail.